No, the title is not clickbait. I sold all my Solana. But before you freak out, I'm not bearish on the markets. I'll explain why I exited Sol, as it'll also at the same time allow me to give my perspectives on the massive deleveraging that occurred this past week, and how I foresee what's to come by the end of the year. I assume I don't need to explain the importance of this one, so make sure you're subscribed, and sign up to our exchange partners CoinW and JumpX with links in description. JumpX is the sister exchange of FairDesk except new and better. With the link you get max VIP status and 10% trading fee rebate, the highest in the space. And with CoinW, who are quite literally giving away free money for just signing up and doing a few trades. Both of course are non-KYC and non-VPN, meaning no matter where you're from in the world, even the US, Canada, or alike, you can use the exchanges without any concern. With the formalities out the way, let's talk about why I sold my Sol. It wasn't an easy decision, but it was an obvious one. For context, like a lot of you who played the bear market, Solana was one of my top priorities to accumulate. I did exactly that, slowly dollar cost averaging in the 20s and 30s, having a year-long time horizon when doing so. But then, during the FTX collapse, I went all in, expending all my cash I had reserved for Sol at once, buying in the low teens and huge clips under $10. I was so confident in these buys that I decided to start making crypto-related content. Because if you recall, during that time there was max despair. Everyone thought Solana was going to the grave, and I wouldn't say this got me angry, but I knew Sol still had so much going for it. For instance, all those things being referenced today as to why Solana is so good. It was much different from Terra Luna going to zero, where in that case the mechanisms were built in for it to do so. A currency L1, however, like a Sol ETH, whatever it is, doesn't go to zero. It's more so about when sell pressure stops. I posted my first ever video at $8 to buy Sol, which made up the biggest chunk of my crypto investment portfolio at 15%, tied with BitTensor, which I'm still holding by the way. I've received a lot of thanks for giving that call, but I've now officially exited Sol with an average sell of $148. That's a 12x return on size, completing the biggest trade of my life in terms of dollars, not percentages. But now the question, if I'm not bearish, and if my targets of a $300 to $400 Sol are still well on the table, why did I make this move? We'll first start with the sell targets. So my original plan the whole time was to sell Solana at around $380 give or take. I still believe this is well on the table. But notice how this may actually be considered quite on the lower end relative to what's now being put out there. Figures with a big following like Alex Becker, Elio Trades, Ran Ansem, and more are giving targets of an $800 to $1,000 Sol, and potentially even more. Depending on what type of cycle we get, I suppose that may be possible, but to me it's a bit too optimistic. I get it though, it's totally normal and happens with every asset every cycle. When it gets to a point of high value, there's a feedback loop that plays as to why it should be even higher. 1,000 may seem somewhat reasonable now, but less than a year ago at $20 it would have seemed absurd. During those times a $300 to $400 Sol seemed like the extremely bullish case, and like I said, I was exactly that, which is why I also set those targets. But probably one of the most typical mistakes you can make is raising targets as you get closer to what you originally set. It's the same exact psychology as wanting a $12,000 Bitcoin when it's at 16. You may feel like you're not asking for much, but in hindsight you asked for everything. But here's probably the most important point of them all. Even if Sol got to 1,000, that's a 7x away from my exit of 150. I feel I can outperform a 7x if I re-enter that capital, which we'll get to in a second. But I was never going to let my full bag ride to 1,000 anyway. If things went as planned, my average exit would have been around 400, less than a 3x away from now. And I most definitely know I can outgain a 3x no problem. And so that's what this really boils down to. I sold Sol to yield more dollars. Not because I'm bearish on Sol at all, in fact I've gotten maxi allegations more than a few times. Now you'd think everything I laid out surely isn't an idea that just came to me suddenly, which you'd be right in saying. I started thinking about this seriously when we smashed 100 on our second try with that huge rip to 200. And so with Sol at 200 I decided not to pull the trigger. But why do it now and sell my Sol 25% cheaper at 150, securing only a 12x instead of a 16. In all honesty, even though I had this plan as a viable option, I never really was going to pull the trigger on it. Like I referenced in my Sol exit strategy video, I was more than happy selling Sol at 400 and having moon bags run up to those 600, 800, 1k plus levels. But the reason I did what I did has to do with the market meltdown we experienced this week. It all started with the Fed not cutting rates, which I tweeted about. At this point they're so behind the curve it's not even embarrassing. I kind of respect it in a way. A clear obligation for ulterior motives in the works. This has nothing to do with inflation whatsoever, where it's not even disinflation that's the major talking point here but soon deflation. Couple that with Japan imploding the way it is, I'm sure I don't have to explain the carry trade yen interest rate saga. After all, everyone's suddenly become an expert Japanese macroeconomist. But needless to say, what we saw isn't just some gimmick, it's a very serious thing that can have some serious follow-through and repercussions. Never did I think we'd see this meme play out on the mass scale that it has, but we're seeing exactly that. Everyone glorifying buying the dip and diamond hands. I'll tell you one thing right now. Let's say this isn't the top, which I'll expand on in a bit, as I don't think it is as well. But everything you're seeing right now with the calling out of people who panicked out or aren't buying the dip is the same exact thing we're going to see when the actual top is put in again, assuming this isn't it. It's a groupthink process. Diamond hands are seen as strength, but it's actually weakness. You're too weak to exit, which goes back to what I always say. Selling is the hardest thing of them all. So let this all be an exercise on sentiment. It's called complacency. No one cares about your individual needs, so you have to take on that responsibility. I honestly don't know what happens from here. An aggressive meltdown or V-shaped reversal are as likely, but given that I've exited only my soul, which made up 15% of my bag, I'm clearly still risk on by still being 85% in. That said, though, I can afford to do that. Hypothetically, let's say my portfolio started off with 100,000. If 15% or 15 grand went into SOL with my average entry of $12, that's 1250 SOL, which sold at 148 gives me 185k total. So I've already outperformed my bag by 85%, which is obviously quite pathetic. But it's how I've personally hedged my long position, with the other 85% put into Bitcoin, BitTensor, Arweave, and all those other crypto I own. So you can see why I'd make a move like this. I'm still mostly risk on and hedged completely in case things do unravel here, which by the way I don't think is the case. I still expect a hard meltdown, but before that a strong blow off top across all markets, especially crypto. If I go on the weekly, as you can see, that trend line forming the second angle may seem like it's broken, but the way I was taught to draw trend lines is connecting distribution to distribution candle on an uptrend, and then adjusting that trend line if you get a full body close outside of it if there's no follow through. As you can see, this candle from the 1st of July had its whole body close below but with no follow through, and so if I array it out and adjust, the trend could still be seen as intact by just a hair. You may be saying, Payne, that's ridiculous, how can you just adapt trend lines like that? But an example is from this aggressive third angle in 2021, where there was no hanging on or full body closes outside of the trend. Instead, there was complete breakdown to the angle below. And so far, although very close, we still have not had that happen. And so, contrary to what a lot of this video may suggest, and some hopium for the bulls, is regardless of everything, this angle before the one leading up to the blow off top still seems to be intact. And so with that said, what am I doing with the stables I just pulled out of Solana? Where am I looking? I've got my eyes on a list of altcoins. Remember, from this point on, my goal with that cash is to outperform Solana, which can be as low as a 3x but as much as a 10. So I am looking at some assets, particularly the DeFi sector, which I think can make a strong move in the next leg. Things like Curve and Aave, and Convex, Makerune, and more. And it's so funny because going through X I saw this post by the credible bull who laid out pretty much exactly my thought process to the T. Now I don't know if Curve does a 50x from here, but you get the idea. There's also the strong mid-caps like Caspa and BitTensor in the mix. But I'll make a full in-depth video of my buy list next video, so make sure you're subscribed for that. By the way, I tweeted about all of this on my X, so follow me there if you don't already. I'll leave a link in description. Also my Instagram, where you can get in contact with me. I'm trying my best to get back to all of you, but understand there's a lot of questions. Don't forget those exchange partners also. But I'll leave it there for now and catch you guys in the next one.